Hi everyone, this is Rashmika from ithought. Today we are going to explore the topic, is real estate better than the stock market? It's important to understand that both these asset classes are equally important and the adequacy in each of them is going to help us in our wealth creation journey. But however, before making such a big investment and a decision, it's important to keep a few points in mind. The first one would be to understand whether this real estate purchase is for our own consumption or whether you're buying it as an investment. Second would be to assess the need and the situation of this asset. The third would be to understand the legal and regulatory requirements that come with it. Fourth would be to understand the current and the future tax implications that this asset could have. And lastly, it's important to understand that there might be additional expenses and costs which you may be incurring during the course of this purchase. Now, to understand this a little bit better, let's take an example to see how would it be if you were to purchase something today versus something 3 years later. So in this example, we are taking the value of property that the investor wants to purchase at 2.25 crores. The proposed loan that was planned for is 1.6 crores. The cash that the investor has available right now is 65 lakhs. The interest rate on the loan is assumed at 9%. This would lead to a monthly EMI of 1.72 lakhs. The tenor of the loan would be for 15 years, and this is keeping in mind that the client currently draws a net salary of 2.4 lakhs. Now, let's take the scenario of how it would be if he were to invest this monthly EMI in a systematic investment plan in the stock market. So, he would be investing 1.72 lakhs per month. So, the total amount invested would be 61.92. Assuming a return of 11% for the next 3 years, this corpus would grow to 73.63 lakhs. Now, the bulk investment of 65 lakhs, we also assume here gets invested in the stock market for 3 years, and assuming a return of 11%, 65 lakhs would grow to 88.89. So, the total value of investment after 3 years would be 1.62 crores. Now, we also need to assume that the property also appreciates for this timeline. So, we are assuming 3 scenarios. One would be at 5% increase year on year. The next one is 6.5% and the last one is 7%. So, the value that we assumed initially of 2.25 crores in the property would have grown to 2.6, 2.7 and 2.75 respectively. So, if he were to buy the property 3 years later, the value of the new loan would be 97.93 lakhs, 1.09 crores and 1.13 crores respectively for the 3 scenarios. And you can also see how the monthly EMI would be looking for the 12-year tenure of the new loan. So the total amount paid over the next 12 years would also be lesser, as you see on your screen. And this is compared against the original value of the loan, which is 1.6 crores, and the EMI is for 15 years with 9% interest of 1.72 lakhs, and the total amount paid after 15 years would be 3.10 crores. So what can we observe here? By postponing the purchase and investing the money for 3 years, an approximate savings on the overall loan could be around 1 crore and the interest savings of around 40 lakhs. And by continuing the SIP on the difference in amount, the client can actually pay the loan in 6 years instead of 12 years when his EMI will be approximately 1.1 versus 1.7. So what we are trying to say here is that it would be prudent to work with a financial advisor or a financial planner to help you evaluate the different options available to you and make your decision process a bit more easier. You could get in touch with us if you're looking to make any kind of a real estate purchase so that we can help you in this journey. Thank you.